Hey people. So just kind of wanted to make a quick video on why Bitcoin. So as you can see up the top there. So I think the number one reason why Bitcoin, why it was created is because banks were being bailed out left and right. So money was just being printed. And so the main thing is that our money is being deflated in inflation, and that's what the Fed says is anywhere between 2 to 3% a year. Well, I think it's something like over, I don't know if this is correct, but it could be 50%, over 50% of all of the money, the M2 money supply was created this year. It's 20 to 50% or something like that. I don't know, it's a staggering amount of money that was printed this year alone. And they're still not done. They're talking about doing more. Biden is going to do more stimulus next year. And so we're just printing more money. And so what happens when all this money gets printed is that the value of the dollars that you hold, just if you had a 0% interest savings account, your $100,000 or whatever, that inflation is eating into your $100,000. So this is after 10 years, the value, the number 100,000 will still be there, but the purchasing power, the value of that money will be down to 73,000, a little over $73,000 after 10 years. And so the idea is, let me run through this list and then I'll kind of get to Bitcoin first. The idea for investing is to try and beat inflation. So, a lot of this money printing has gone into the stock market. And so that's why you've seen stocks like Tesla and other companies, just 5 and 10x, this year. And so there's a disconnect between where this money is going. We only got one stimulus check like 9 months ago or something like that, while the stock market, literally the Fed is buying up junk bonds and stocks and all sorts of stuff on the open market using a special purpose vehicle. They're like BlackRock, in order for them to legally be able to do this. And so that's exactly how the stock market is being propped up right now, is the Fed is typing digits into a computer, creating all this money out of nowhere and giving it to the stock market. The people that own all this stock, it's going up in value because the bonds need to increase in value because their yields are getting so low, and that it's a whole mess. And so if the bonds don't keep increasing in value, then the bond market fails, and that causes like a whole collapse of stuff that you don't want to get into. So on average, in the stock market, like if you invest in like the S&P 500 index or something like that, your goal is to, what they say is like you're going to get between 5 and 8%. So if you're getting a 3% inflation, your actual cost or the actual yield that you'll get is, between 2 and 5%. So, after 10 years, that $100,000 looks all right, cool, $162,000. But in a year like this year, where we have super high inflation, it's probably between 10 to 15%. It's insane. This is gone. And the Fed said that they're reaching for an average of 3% or 2 to 3% now, instead of just like 2 to 3%. So that means that they can go higher. That also means that they can go negative, which they also are talking about going negative on interest rates. And that will immediately eat away into your savings account, and you will not have any money. So does the US dollar sound like a good system to be invested in? So just holding on to the cash itself, because consumer prices get more expensive, because the cost of living increases and companies have to pay their workers more per hour, like a raise increase to $15 an hour. Because our money keeps getting inflated, the cost of goods will increase, and so therefore it will feel and seem like you can, and your purchasing power will be reduced. And so that's all you'll be able to purchase is less than three quarters of the original amount after 10 years at a 3%. That wasn't even considering like a 10 or 15% inflation rate like we've had this year. So moving on back to, stocks, bonds, so not only, and then if the value of the stock increases at 5 to 8%, cool. So you might get a dividend, and then you've got bonds which pay a coupon. So those are all good aspects that could increase the amount that you're making per year. But I'd say maybe you're making like a max, after the inflation adjusted, maybe max 10%, which it's not bad, nothing to shake a stick at. and stocks and bonds have traditionally been a very safe place to put your money. But as we've seen this year, there's been extreme volatility. And then also when you sell your stocks and bonds, you have to pay taxes. And so that's going to eat into your profit as well. This is all about money management, just trying to figure out where to put your money, where it's going to do the best. And so you might think, well, shoot, I'm just going to buy a whole bunch of gold and I'll be safe there. Well, okay, so again, you're dealing with that inflation up there. And, you know, we had a really good year in gold. Gold went from 1,500 up to 16, 17, back down to 15 in March, and then it reached up to like 2,100. But right now, I think we're sitting at just around 18, 1,900. So the average was for the year was about 20%. So that's a pretty good year for gold. Nothing, you know, again, to shake a stick at. But gold, so like stocks and bonds, gold has inflation because when you mine gold, you're producing more. And so they say, you know, you can look it up, it's about 3% a year of the annual amount of gold that's added every single year. And so like stocks and bonds too, they can raise the amount of shares that are issued, and more bonds can be, a company can issue more bond debt. Like, it's a lot harder to get, but you know, like with stocks, they can just raise the number of authorized shares and issue those out to the public to raise capital, or if they just want to sell some stock because they you know, like some congressmen earlier in the year had some foresight into like the market was going to crash, so they were all infamously, they didn't even get prosecuted or anything, nothing happened, but you know, it was on the news that they had sold some stock and then made a whole bunch of money. So there's that. So there is still inflation in the asset itself. So like holding cash, you have the regular inflation, but then you still have inflation in that more can be created than there originally was when you bought it. So just like cash. But you know, if you choose to invest in gold, you got a 20% this year, adjusting for inflation, you know, 14%. And if you can keep that going for 10 years, then you're going to do really, really well. I think, you know, that, you know, $370,000 is, I think, a little bit high. This is considering you're investing at $100,000. But I think gold is going to have a really good, strong decade. I think this will be a good decade for precious metals, just because of the amount of money that's been printed. But I still think there's a better winner. So moving on to real estate. Now, real estate this year has also increased by a substantial amount. It's like 8 to 10% and even higher in some places. So you have to, I mean, with real estate, there can't really be more printed. You know, we can produce more houses on vacant land, which will, you know, is kind of an inflation, but it takes years. I mean, I work in construction. It takes years for that stuff to get done. And then the actual process of construction, you have to fund it, you have to get approvals, you have to actually build a thing, you have to get your inspections done and all that. So there's just a lot that goes into even just creating, even though the projects that are going on now because of 2020, I don't know what amount of financing will be available. Well, I mean, shoot, with all this money printing, there could be a lot of financing available for future construction projects, would be good. Because there definitely needs to be, we need to build some more houses in some of these high valued places, because it's just hard to live in some of these areas. But also with real estate, there's some high taxes that you can't avoid. There's a lot of people that talk about real estate on YouTube, so I don't need to go too far into that. But then you've also got maintenance to consider, like, you know, just the upkeep of the house. You know, maybe you want to paint a room, or like, you know, if you choose to have roommates to help pay your mortgage, maybe they damage it on accident, something breaks, you know, stuff's gonna happen, you know, and you gotta have, and then there's insurance and property taxes on top of the sales tax for the asset. So yeah, this 8 or 10% looks good. And then even after considering the inflation adjusted, you know, if you're able to, you know, this is just value on paper as far as real estate goes, because you can sell all these pretty relatively easily. Real estate's really a lot harder to get out of, so this is pretty much just on paper. But after 10 years, you know, you'll double your money. It's not bad, but you know, that's considering also that we have good years and that you don't have a whole lot of maintenance costs and high taxes, and you know, maybe you're unable to avoid certain taxes when you sell your house, and you know, just there's a lot of balancing real estate can be a lot of fun. A lot of people make a lot of money with it. I don't own any real estate at the moment currently, but there can be money made and cash flow made in with real estate. But I'm trying to go for the fastest horse in the race. I'm not trying to fool around. I'm young, I have time, but I see this inflation. I see what the Fed is doing, what the government is doing. I disagree with it. I think millennials are a lot like the greatest generation in that we just are tired of the BS and we don't want to put up with it. We want to create our own destiny. I think millennials get a bad rap, but we have been shafted several times. Like with the 2008 financial crisis, we've got the pandemic, we have 2020, the crisis. It's just so many things. And so that's why about 10 years ago, when a lot of the money was being created to bail out the banks in 2008, someone unknown named Satoshi Nakamoto created Bitcoin. And so I'm not going to go into the whole history about what is Bitcoin. I'm looking at it as an investment vehicle right now, and as to why I feel Bitcoin. Again, I'm not a financial advisor. I'm just a guy on YouTube. So I feel like Bitcoin is going to be the fastest horse in the race, and no other altcoins or cryptocurrencies will even come close. I like Ethereum. I like the idea of Litecoin and Ethereum pretty much, but that's it. I'm sticking with Bitcoin, and here's why. Because with Bitcoin, there can be no inflation. There's only 21 million coins. They can be divided technically infinitely, because it's just computer code and math. So, but right now it's down to, I think, 8 decimal places or something like that. And so because it has limited supply and 7.8 billion potential customers, yes, because there's a limit on this, you can't technically have unlimited demand, but it's essentially unlimited demand because of the limited supply and our ability to grasp just how many people and how much money on this earth can actually flow into this. Like, global debt is somewhere around $272 trillion, and we aren't even at 1/10. I think we're at 1/20th of the gold market right now. And so if Bitcoin were to equal the gold market, it would be somewhere around $600,000. And there's a lot of reasons why Bitcoin should be more than gold, because it has greater utility than gold as a digital asset. And so if you took that 100,000, today's price, Bitcoin's almost reaching up to $30,000. So I'm just rounding it off. If you had 3 Bitcoin has this year, if you caught it at the low in March, it was around $33,000, $3,500, and so it's upward near to 30 grand now. That's 9 to 10 times the amount of money that you would have made. So if you took that 100,000, at March's prices, you would have made $1 million off your 100,000. But even if you had bought at the high of 2017, you'd still be up over 50% on your money, and it's still going. Now, when you're looking out 10 years, it's kind of hard to do. There's a lot of speculation with Bitcoin, but a lot of people, including Michael Saylor, see it as the next world reserve hard money asset. And if you look at it, if that's how you see Bitcoin, if you think Bitcoin can go there and it actually become a hard world reserve asset money, then there is a very high price that Bitcoin could go to. In this next bull run, they're considering somewhere between $100,000 to $400,000. If you watch my other video, that's kind of where I shoot it towards. I think we're going to hit 100,000 here pretty quick, because we're already at 30. We are literally increasing it by $1,000 a day right now. And if you consider it's already at 28,000, 30,000, and that's only like 2.8, 3%. That's not that big of a move anymore. $1,000, 3% is, now we have to be looking at percentages, not the dollar figure that the price is reaching. Yes, $30,000 is going to be a psychological price, but the number of thousands is just going to become irrelevant now. We're just going to be looking at percentages. Even I'm sure in the future, 1 to 3% will be like looking at ourselves like the Bitcoin just reached $100,000, which I think it will reach this year very soon. But in the next 10 years, I estimate Bitcoin could reach somewhere anywhere between 500,000 to $1 million per coin. And so that would put you at roughly on the low end. I know it would be technically 1.5 million, but if we went on the low end, but below 500,000, then you'd be at somewhere between 1 million to $3 million after 10 years. Now, I don't know about you. If you just, and I know $100,000 is a lot of money, and a lot of people don't have that. But if you consider, like, after 5 to 10 years, you know, I'm thinking closer on the 10 years time scale, it could be 500 to $1 million per coin. Like, I would definitely try and get as much Bitcoin right now as you can, because the prices are just, it technically is still extremely cheap. And so over this next year, we'll see what happens. But I've chosen Bitcoin as my investment vehicle for 2021, where I've put most of my investment money. So we'll see what happens. I am taking a risk. I'm still young. I just turned 31 not too long ago. So we will see what happens. And if I get wrecked, I get wrecked. And this video will be evidence of that. So I hope to see you guys in the future.